Warren Buffett, CEO of Berkshire Hathaway, has recently revealed through the company's 13F filings that the company has cut their stake in Apple by more than half. As part of a selling spree in which the group sold billions of dollars worth of stock, Buffett has not signaled why he is selling his Apple shares and has shown no indication in stopping anytime soon. So why is Buffett selling so many shares of Apple? Well, let's take a dive into some possible reasons why. In 2016, Apple stock was trading at roughly $24 per share, and currently it is now trading at around $225 per share. People who invested in Apple during 2016 have now 10x their investment. To put that into perspective, they have made 100% return on average year on year. But weirdly, outside of 2018 and 2021 being outliers, Apple has seen revenue growth of less than 10% and half of those being less than 6%, with some of those years being down years. The last 3 years have been particularly poor for Apple, with growth in 2022 being 7.79%, 2023 being down 2.8%, and this current year being 0.43%. Apple's net income is not a whole lot better either. Breaking down the most recent quarter, year-on-year sales for the iPhone fell 0.9% to $39.3 billion. Mac sales grew 2.5% to $7.1 billion, and the company's wearable segment fell 2.3% to $8.1 billion. Pretty flat numbers if you ask me. Apple's services segment, however, which was a positive, which includes the App Store, Apple Music, and TV products, did however rise 14.1% to $24.21 billion. So if sales growth for Apple has been poor in the last 10 years, and more so especially in the last 3 years, why does the stock price of Apple continue to rise? Given that Apple is part of the Magnificent Seven, they do get a lot of exposure to the general public. But in this case, the math does not seem to be mathing correctly. So this may be a consideration as to why Warren Buffett is selling. Doing a deeper dive on Apple's valuation, Seeking Alpha, who is today's sponsor of the video, has given the following ratings for each valuation metric for Apple. Apple, who has a PE ratio of around 30, have a C rating. A price to earnings growth ratio of 3.5 has a D rating. An EV sales ratio of around 8.8 has a D rating. A price to sales ratio of around 9.08 has a D rating too. And a price to book ratio of roughly 51.5 has a rating of F. Based on this data from Seeking Alpha, this may suggest that the price of Apple may be a little bit too expensive based on their current earnings. Compare that to 2016 when Buffett first invested in Apple. The PE ratio back then was roughly sitting at around 10, but with Apple's PE ratio today being at roughly about 30 or so, that's an incredible 3 times multiple on the valuation of Apple alone without even considering earnings. Imagine a stock price going up 3 times for no particular reason at all. That is essentially what has happened to Apple. Although ideally, investors should be investing in businesses with good, solid long-term fundamentals, it is important to understand that valuation does play a key component into whether we would like to pay for this business at the price it is currently sitting at. Warren Buffett reiterates this statement over and over again by saying it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Considering the average PE ratio of the S&P 500 sits at around 19.4, Apple has been priced in for 50% more growth at their current PE ratio of around 30. Given Apple's historical earnings, this would seem that Apple would be a mispriced company. At its peak, Berkshire's portfolio was made up of 40% Apple stock. Buffett stated at the company's annual meeting in May, unless something dramatically happens that really changes capital allocation strategy, Berkshire will have Apple as its largest investment. In line with the large selling of Berkshire's Apple stake, his sentiment may have changed. He has been quoted in saying, "Under current conditions, building the cash position, when I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive." Given Apple's short and long-term earnings have been quite poor, their continued slowdown in sales of their physical products, and their high valuation, this may give us a clue as to why Warren Buffett is selling his Apple shares. Outside of financial concerns, Apple has faced numerous legal battles. It is well known that businesses who face many legal battles become quite risky businesses to own, as a few hefty fines or a large enough reputational damage can wipe out that business. For example, the European Union antitrust regulator has stated that Apple has breached the Digital Markets Act on many occasions, including accusing Apple's App Store of breaching this act by charging developers a commission of up to 30% for in-app purchases, and preventing developers from directing users to alternative payment options or app stores. In March, the Department of Justice stated that Apple could use its dominant position to get more money by creating unfair terms to developers, content creators, artists, publishers, small business, and merchants. The Doge also argued that Apple's dominant position allows Apple to charge high prices for its devices and services and reduces economic opportunities for smaller businesses and entrepreneurs, as it may be more difficult for them to enter the market or compete. Many other states, such as California, New York, and Texas, have filed their own antitrust lawsuits. Apple also faced an additional class action lawsuit that it misled consumers about the privacy protections of its products. The lawsuit specifically accused Apple of collecting and sharing user data without proper consent or disclosure from the users. Although Apple has never had any fines in relation to their labor practices, their reputation has been damaged somewhat by some of the front page news that has come up in the past. In 2013, Apple discovered that one of their suppliers, Suyong Electronics, one of its Chinese-based suppliers, relied on child labor on multiple occasions, but still took 3 years to fully cut ties. 10 former members of Apple's supplier responsibility team stated that the company has been slow to stop doing business with suppliers that repeatedly violate its labor policies, when doing so would hurt its profits. Given Apple has been outed as working with suppliers that have been considered unethical, this has had a knock-on effect to Apple's reputational damage. So what is next for Apple and Berkshire Hathaway? Do you think Warren Buffett will continue to sell Apple stock for Berkshire Hathaway? Let me know your thoughts in the comment sections below.